Hi, good day. This is African Crypto Warlord. I hope you guys are doing well. I hope that you've been watching some of these volatility analyses, and today we're going to drop down into our dirty little secret, which we've been waiting for the 5 days. So I'm going to show you how it plays out on the 6-hour time frame, for example. And all it really is when 5 of my volatility indicators, these guys, all flash. Then I know to throw up a distribution cone. So when they all flash in a row, I'll throw up a distribution cone because I know that distribution is at 0, and I can throw up a Laplace distribution cone. I'll display it in a bit. And then from there we can decide longer term moves and general areas. So Laplace distribution is probability theory and statistics used together, and then I'll use like a VRE levels that you guys have seen, the weekly mean, the thumbnails and stuff like that. So weekly mean, we wait for those guys to verify themselves, or monthly mean at a Laplace distribution cone level. I'll display it in a bit, but I want to drop down through the time frames, and then we will key out specific areas. And we've set that distribution cone up on the 6-hour, considering that the 6-hour has had a lot of, how do I put it? It's been very range bound. Okay, so we'll monitor that and we'll go in and observe that. So right now we're going to go throw up we're going to start at the 5-day. We're going to go look at Shannon Entropy, and then from there we're going to break it down. Okay, I'm going to try and make this as quick as possible so that it is a good run. And we currently have returns mean reverting to the downside, obviously with this candle being very big over here on the top left. Returns mean reverting to the downside. Trend seems to be picking up. If we close in this region in 5 days, we will look for continuation through on our entropy oscillator here. I took it out from this region from my previous videos and I put it here. Our alpha trading tools, they do have an inbuilt system now where this is happening. I just had the idea I needed to clean this chart up so that it didn't look so hectic. So what we see here is expansion in volatility. That's the red column. Negatively correlated, that's what's giving us our downside. Super scalpers also agreeing with that, but if we hold there, then we're going to get stuck in the trend. So let's see if there's something that's going to blow us either way of this trend, too far down or break us up out of the trend. That's what we're going to come in and monitor on the 3-day. 3 days hit its outlier looking for a downside, still significantly positively correlated to the downside. Nothing as yet, but we've had our 2 blue flashes come off. So in 3 days time, if you're brave enough, you can start to enter at this level. I entered in. I've entered in at around about 3336 or something like that, excluding sell pressure by Binance. 24-hour. We're gonna go look on a 24-hour. So 5-day, 3-day are matching up to the downside. Come on, 24-hour load. Come on, 24-hour load. Hope you guys are also not suffering from. Okay, so we have contraction was negatively correlated. So on a 24-hour, that's going to help match us up with our mean reversion that may happen at the end of day. Remember, we called targets last night with regards to mean reversion a little bit to the upside because our new daily print is going to come in and our new daily mean is going to be there. So currently, when I switch on VRE timeframes from when we get 6 hours and below, you'll start to see that the price action candles at least hit the first downside on our on our daily mean print. Okay, so that's mean reverting to the downside. We've had our outlier. We're having our first push. That's what we mentioned yesterday, but it did get pulled back. So we're having our first push up into our first standard deviation of positive returns. Then we're going to go drop it down to the 12-hour. Make this quick as possible. So 12 hours, got 45 minutes to print, and hopefully I can get to that within enough time. So we don't have enough data here yet. I just need this internet to fucking load. Okay. Trend is decaying, still significantly positively correlated to the downside though, but these candles do look like they are going sideways. And with that, there's going to be a little bit of confusion in the market. Trend decaying, going sideways. Yo, this tool is a bit annoying to use on a live stream. There we go. Cool. 3415, let's go across through 12 hours matching up at the 24-hour. Let's put it on the 6-hour. So blue flashes have come off on our 6-hour positive, same matching. So 24-hour and 2-day, 24-hour and 12-hour are looking the same. This is still confused, but it can easily be pushed up to the upside, right? With these columns expanding over here, trend is decaying. This trend is decaying. That's what we're being told over these past couple candles. It is decaying as it is going up. We've hit our outliers. 6 hour, 12 hour, 24 hour, all looking like they speak in the same language right now. So we might be pushing for some upside. Let's go put in some VRE levels. And then I'm going to end us off with the beautiful 6 hour distribution cone. Okay, and that will give us our general target. So this is our daily mean push that we observed yesterday. We can put on our targets. We can see that we came in, we hit our pink target. This is where we are right now. We're looking to break through this, maybe come in, hit the daily mean. If that happens, if we close a couple 3 hour candles, I would say 18 hours worth of 3 hour candles above this daily mean, you can use that as a bullish div to get us further up into levels that will be put up on this side so that we can monitor whilst we're shuffling through. So a level for the upside will be 3638. That's a weekly mean. Maybe by Sunday it could target this region, but our first stop over the weekend could definitely be 3454. Okay, so now 3454 will help set bullish div during this mean reversion phase. Thus the bears will lose if they close above here. If the bulls close above here, the bulls will lose this mean reversion, thus helping put in a bullish div. Let's go look for a few other indicators and time frames. So we got our 90-minute out, 90 minutes looking to expand to the upside. So this is generally, if this expands to the upside and we bite this trend, that's definitely going to help returns, mean revert, and put in a hidden bullish div to the upside. And from here we have returns have contracted, so it's going to be easy to get to a first standard deviation move from here. This meaning it could be easier to get to 3454 by the time this video has been posted. So we're going to put it on the 45-minute and we'll end it from there. Generally, this guy is what I like to use. 45-minute, trying to set in a bullish div. So the 45-minute, if it closes above this green line over here at 3415, then it could help set in this bullish div, which will get us up to 3453, which is a percentage difference of what is the trade currently to the upside. And if it fails, we'll go look to the downside, 1.7%, 1.17% excluding trading fees to the upside. Okay, so what we can see here, some bullish div happening. Let's see if our 15 minutes getting cut down, and then from there I'm going to show us the 6 hour treat. Okay, 6 hour treat there, open up, not yet. My mouse is all over the place. 15 outliers happened. We can look for positive correlation to pull through the book here. If we expand from this area where we haven't really been expanding for the last couple candles, that could push us up. What can happen here? Nothing much on the 15 minutes, so this 15 minute might print through bullish, but this is the cross we're going to look for, and I'm going to put it on the 5 minute just to see if we're running out of steam at least. So there is a little bit of market structure in here. That does look a bit bullish. We have some red flashes, first returns to the upside. This is actually quite confused. There's trading view messing up. This is quite confused over here, Shannon Entropy, whilst that is down, but there is a move to happen off of here. As I say, here we go, our 5 minutes helping out 15 minute, which is helping out 90 minute. If we close above this line over here, it will help defend the mean reversion to the downside that is happening. If we close below this line over here, expect this at 393. But furthermore, what I'm going to do now is just for weekend targets, you could say, or coming into next week, as we get to the 24th, the date that I've been pulling up quite a bit, we're just going to throw up our 6 hour cone. Where's our PB2? So I already preset it up. I'm going to open it up so you guys can see, and we're going to zoom out. We're going to take these off. So anyway, let me just put on some VRE levels quickly so you guys can see. These were the targets we previously discussed. This is where our daily mean could have been scalped if we ripped up yesterday quite quickly, but generally this is the magnet. That's the next magnet to the upside. Okay, but VRE levels off, PB cone on, those off. And what we can see here, this is Laplace distribution, right? So I have 12 lines to the downside. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, and as you can see, it doesn't like to close outside of the first of the 12th band. Quite touching. So how I set it up, I just have these volatility levels over here, and I match them up, and I put my distribution cone on. the candles that all line up, that tells me that volatility has zeroed. And now within random distribution, we can see which way volatility is going to be pushing price. And considering that it's been quite on the money from wick to just off of wick and getting caught in these channels, back up, getting nailed down perfectly, opens, tries to open and maintain above the cone, doesn't maintain above the cone, dumps back down into a whole bunch more regions, people panicking in here. And then we're coming in through, we have obviously our waves getting nice, some clean signal processing coming through, and now all we're doing is we're just returning to these levels that we were previously fighting. Okay, so this is a defense to the downside. You can see that bullish div can be set if we close a bunch of candles up here and we don't go lower than here. You'll have a bullish div. Inverse, or furthermore, you'll have a bullish div at this region on a longer term time frame, so you might pull that out to, people will start to look for divs on like a monthly time frame or 2 weekly time frame. So these are my general levels for the weekend. If it was to get really volatile to the downside, right, and we'll keep that furthermore, so we'll make these ones different colors. We'll put that one green because I'll definitely be there to buy that, and this one we'll make it red. We'll make it red, right? So what we can see here is the price action at 28 cents, so just call it 29 cents, and over here we can see it at 30 cents, right? Currently, for us to continue to the downside and have statistics and probabilities on our side, we just need to not close. Well, if you want to continue to the downside, you want to be closing candles below 334, right? Now those are numbers that are highly speculative in the market. So there's your distribution cone for the 6 hours. I will be able to throw this up on the 5-day and we'll be able to get some cool returns, but currently your market limits until the end of the year look like this. Okay, where's the end of the year? Here's the end of the year. So mean reversion at the end of the year is 71.59 cents to the upside, and to the end of the year could be to the downside. Let me get the bottom cone. Could be 7 cents, guys. 7 cents. December comes along, could be 6 cents. So it obviously doesn't want to break out of these areas. As you can see, it gets quite bought up. But there's your range. 11 cents is to the downside. And here's your range to the upside, all the way up from, wow, that's crazy, $3, $4, and that's no FOMO. That's how you're calling zones in things that look so random. We'll turn those off, and I hope you guys have a good day further.